Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Within the last 24 hours, the Australian dollar continues to portray a familiar pattern that hovers around 69 cents and still contained by the level of 69.45. However, the technicals are still slightly firm and therefore we should not rule out another challenge to that topside key level of 69.45, and if we do see a break there, would fuel the move up towards 71 cents as a potential target. Looking ahead, the market is now waiting for the market mover, as I would call it, for the monthly inflation figures or the consumer price index for the US, which is out either on Thursday or Friday Sydney time at 12:30, which could show whether investors' rising optimism recently has been warranted or overdone. Forecasts are expected to show inflation easing to 6.5% last month from 7.1% in November, and also dropping away from the highs in June of 9%. Along with that, investors were a little bit relieved to US Federal Reserve Chairman Jerome Powell refraining in any monetary policy comments. Looking, therefore, for the Australian dollar, any pullback would find support around 68.60 and a base around 68.35. For the dollar index, which measures the greenback strength against a basket of 6 major currencies, virtually unchanged from Wednesday, the euro has edged up slightly, but no little than around 40 points since the break of the 107.20. I feel that the market is all waiting for the US consumer price index data, and if it does come in weaker, then the dollar will probably continue its descent as it trades around 102.90. The target to the downside is around 101 to 102. Therefore puts a trajectory for the euro up towards 108.15 to 108.60, or even stretching to 109.45.60. However, if we do get a reversal and see a slightly stronger CPI number, then the dollar would likely rebound and look back towards 104. The dollar yen's coming back to a weaker phase as we see the market heading closer towards its objective, which is around 130.40.60. I feel the market may again find demand there, but lacking that gives little interest for demand until around 126. So it is a key level around 130.40.60, and if we do see a close under there in New York, it does reveal the region of a 126 to 127. The pound was a little much unchanged, but still holding to its gains since Friday and looking still towards the region of 122 to 124. Any pullback should find support around the region of 121.25 to 120.70. We witnessed another upside attempt for gold, but it still failed to take out the level of 1,882. I'm not abandoning this level just yet, due to the fact is that the indicators are still bullish from the MACD and the RSI, and the ADX, although overheating, still holds to a strong trend. Keep an eye on the plus die and the minus die as it's starting to drop a little here. Nevertheless, if we do see a break of 82, would give further scope up to 94 or to a target of 1,904 to 12. Any pullback looks towards 1,864 to 1,857. Finishing up with oil, the market crushed through that level of 76 and ignited a further rally. Now looks towards the region of 78.15.20. If that breaks, that would give further scope up towards $81 a barrel. I would like to see a little bit more evidence when it comes to how the market's looking, even though the technicals have firmed up. Therefore, dips are likely to be shallow and support region is around 75.70. Well, that wraps it for today. Thank you very much for joining me. As always, look after the intraday, Paul, and I hope you enjoy the rest of the day.